All right, already, yikes, right? We've opened up 9:30. Where's 9:30? Yeah, it's pretty terrible so far. So today, let's go to a high time frame. First of all, actually, we'll find opening range midpoint. We always like that. It's actually going to be aligned with the, okay. So it's aligned with the 1 hour midpoint. Remember that. Check out the hourly. So this 1 hour fair value gap is exactly midpoint of our opening range. Huge displacement from last week. We close above the liquidity. Yeah, I wouldn't mind trying to get bullish actually. So we've been moving lower. We've cleared that sell side already. No first. Oh, that's a good point. Yeah, nothing yet. I know it's real bad. No fair value gaps at all in either. Actually, NQ did have one. Yeah, still gross. We are holding a first presented, an old one now, right? Old weekly. If you see this color, that means it's the first one that was presented that week. The pink is just like that day. And if you ever see a red one, it's the first one presented that month. So what's that sell side? Include the sell side here. Yeah, we favor buy side. We'll look for up here. A lot of fair value gaps. As we said, 1 hour is pretty much a midpoint of our opening range. We'll favor that. High impact news here in a few minutes. Ideally, we try to pick up a low, but because we already cleared the short-term low, we might just go straight up. But ideally, I'd like to see us try to clear a short-term low here, or these equal lows. We could even get this one if we wanted to. Retest the 830 level. But we'll look for a run higher. On a higher time frame, we're holding that first presented pretty nicely, so we might just accelerate right here at 10 o'clock. Yeah, we could do that. The TDL, is that the one that you showed me, I'm guessing, right? This, oh no, this one. Yeah, I can show you that one. The first presented. Right after we open, we'll take a look just to see how we open up. See if we do an early entry. Volume imbalance here already. A lot of times, if we're going to use 10 o'clock to go in a direction, we'll use whatever discount was just created. Right at the low of the opening range as well. So that may become an area of support as we trade down into that. Let's say that we go midpoint first. I'd actually would like to see if we don't want to give a retracement off that then. So not necessarily looking for a breakthrough and a run, more so just a retest of that inefficiency. Then retrace back into the range, kind of. No SMT at the lows or anything like that, so. News drop inbound. As we said, we'll watch volume imbalance if we want to give some type of retracement. If not, I could see us going straight into that opening range midpoint. Nice, okay, so that's the hourly. Move that because it's pretty much just midpoint of that hourly right there. 1 hour. All right, so we clear relative equal highs. We deliver into the 1 hour. Fell just short of midpoint, unfortunately. We do have a 15. Okay, so we hit that 15 perfectly. So at this point, we fall outside opening range. We would expect that becomes an inversion. Right, this is kind of that Judas swing we spoke about. Usually it's at 9:30. No impact or no news at 9:30, so at 10 o'clock we could often see that form as well. We did get the pump up we wanted to see, fell just short of that target. So that makes me think we might try to give it one more chance, actually. We did clear these relative equal highs here. But I'd actually like to see if we can't test that wick one more time. So as we said, we're going to watch the low, a low of the opening range and this volume imbalance to try to hold price. We'll watch for a retest of the wick. And then we got to watch to see if we can get midpoint of that wick. Let's say we trade up into the wick, reject, close back below the volume imbalance, leaving our opening range for today. Then these relative equal lows in here, right? This trend line liquidity that we've kind of been building up could pick up some of these lows in here. All right, we got some time. Let's take a look at this here real quick. So this indicator I have, pretty basic to be honest. Oh, this will list all the first presented. I like the first presented every day. I have the first presented for the week, and then I have first presented for the month. And then I just have them different colors. So these greenish ones that you're seeing here, these are the first presented fair value gaps that get formed for the week. So those will always play out nicely. I just like to have those. Obviously, the pink ones that we see a lot is just the daily ones. So the first presented for that day. And if we ever do see red ones, it's the first one that's formed that month. I don't even know if we have one up. Let's see. It's probably down, way down here, I'd guess, from August. Oh, we don't even have it on here. Oh, way down here. Okay. So usually it's just the pink and the green. What do we do? I like to go 500, so that's kind of a lot, but I like to see all of them. As we said, I like it to at least be one handle and length. Those, if it's less than that, it won't show up. I think that's about it. I didn't mess with any of these settings, of course. Okay. Oh wait, do I have this? No, that one doesn't actually show up. Okay. So yeah, for me it's pretty simple. I just have first of the week, first of the month, 3 separate colors to differentiate them. And then for me, I'm at 500. So that's quite a lot, as we said, but I just like to see all of them that have formed. Yeah, notice that first weekly, I was like, what the? I don't think that actually pops up though. That's why it's weird. So the actual settings, right? First overall and for the first weekly. This one just controls what will actually show up. So like then you have to go into the actual settings themselves. I have first overall and first weekly for the weekly, and then first overall and first monthly for the monthly. Because I think you have to, I don't know if those have to be on, but I just turned them on and I liked how it stayed. So I think they have to stay on if you want them to show. But like you could even do like silver bullet, first fair value gap with a silver bullet if you wanted. First one following midnight. That's a little much for me, so I'll leave those 2 out. I don't even know what this is actually. The heat map? Nothing? Oh, yeah, no. Okay, that is crazy. Yeah, we're good off that. Alright, so as we've been talking, not much. NQ got that run that we wanted to see. So NQ actually does attack that high. ES can't even get above the rejection block. So as we said, if we see price try to come into this and reject, get back below this low, especially now that NQ has cleared this high, we'll actually look for more of a bearish run. SMT at the highs, and we'll look for a breakdown here. Like, let's say that NQ got back underneath that wick. That'll be the flip point for us to go bearish. While NQ or while ES gets below the volume imbalance and leaves the opening range. Let's say that we did something like that. We could actually try, what's midpoint? I don't mind something like that. So we would try to use the opening, not wanting midpoint of that wick to be tested again. That's if we do break. If we're able to maintain bullishness and actually get back above this wick, then wick will turn into a gap for us, and we'll look for the bullishness to continue. We'll look for like this 15 up here. Very, very, very large 1 hour. Never like having these huge inefficiencies like this. In Q, we are already above its midpoint. A lot going on there. Oh, wait. There we go. So we're right above its midpoint. We displace above that. That's why this wick should hold that we're seeing here. At this point, now that we're inside of it, we're going to watch midpoint. We get above midpoint, we continue to push. As we said, NQ leading the way, so it's respecting that area nicely. No reason to expect it's going to fail, so if we're going to expect that to continue to push bullish, we want to see midpoint try to get closed above. Oh, pre-news even. Okay. Ballin'. That's why we pair ourselves, so I love that. Secure a partial, take the break even. Monday. Good start to the week. Don't need to be too crazy with it. Nice, good stuff, man. So let's say that we do want to stay bullish. Okay, we're going to create that delivery where it tests the lows, but it just continues to create higher lows. So now that we've created that high, all right, there's the higher low. Midpoint is where we would expect rejection, so we could see the retracement from here. But with NQ running bullish, I actually would still think we could get that high. So as we retrace into this low, we wouldn't expect this low to be broken. But if we do give a deeper retracement, this level here is what we'd want to see try to hold now, the order block. So first we're watching midpoint of the wick. Closure above should allow a release for the high fully. As you said, NQ already well above it. We had not surprised there. Short-term high cleared, hitting midpoint of the wick. Rejection expected. Just a matter if we want to actually break structure or if it's just a return into the discount. We said we would expect the order block here to hold price. Expect the wick to hold price as well in NQ. We break below that. We're actually getting below the volume imbalance as well, which is why I have that one marked out. Because if we close below the order block, volume imbalance will be broken. We would actually look for that to then run bearish. Turn this into a mitigation block. Mean threshold OB. As you said, if we're going to create that bullishness where it's like the trend line run, I like to call those. That's where we create those higher lows just on top of each other, right? Lows, lows, lows. This will be a higher low here, which is why we're watching to see if that ends up holding. There's going to be a little fair value gap here. What just happened? Oh, that was you, Mike. You scared me. He said, take the picture down. I just saw chat moving quick. Bullish or bearish fair value gap now. So this would be, once again, another confirmation. We close above that. We invert it. After holding mean threshold, we would expect a run on the highs, continuing to put in higher lows here, ever since this low. Right? Low. Higher low, higher low, higher low, higher low, higher low. Potential higher low here. We do break down. I do like the shorts still. So now we did return into midpoint. We wanted our stop loss to be at midpoint. If we're going to go bearish, we have a swing point formed there. I like that. So we could use that swing. And then we could actually just look for like 830. So we'll have to pick up all of these lows pretty much. We close below, so right away we could go in. We're gonna wait. We may miss it for waiting. That'll be unfortunate, but just with how price is delivering, I'd rather have more confirmation. So let's see if we can hold it again. I don't want to see the one candle negate this and close back inside. Let's say that we hold that as well. We'll try to enter. As we said, we may have missed it. It may just run right away right there. So as soon as we close below it, that may have been the opportunity. But because we have this first presented, I'm thinking that if we do close below, first presented will act as kind of a short-term speed bump that should give us a retracement into entry. So we're waiting for the closure of this here. Let's see how we close. We did pick up this low. We left these equal lows, however. What low is that? That's this low. So SMT at the lows. Close right on that. So I'm gonna give it time. This will be the 5-minute candlestick closing, so we'll wait for that. Just to see how the 5-minute closes. Give us a little bit of a higher time frame confirmation. At this point, if we're gonna want to see bearishness, volume bounce here, we'd want to see that try to hold. Oh, excuse me. If not, if we can actually get back above that and the 5-minute closes with this wick, that would still, to me, be bullish again, especially because NQ could not run that low. That's kind of why I wanted to wait here. Short-term run this high. So now we're getting a little out of sync here. SMT at the lows, SMT at the highs. So admittedly, to me, this is more bullish. I would see this as a run lower to pick up the stops. We close below the volume imbalance once, twice, but then displace right back above that, negating pretty much, right? Closing below that. So what we would look for that to now try to hold and run bullish. We had this 1-minute fair value gap here. We said if we can get above that, that'll be now an inversion. That should continue to push, where we could see the high of that wick. NQ stronger, as we mentioned. If we got a closure above the high, that would be also just another confirmation we could look for to trust the longs will continue. Right now, we're just attacking that liquidity. We're not actually closing above that. We've just now closed above, so we're going to see if that level here will hold. which should send ES higher. Kind of the same idea. We're waiting to see if we close back above the order block here. Falling short of the 1 minute. Overall, though, very ugly opening. Right, terrible price action to start the week. Not surprising, it's Monday. Looking for the 1 candle's chance here for negation. So closure above, running the short-term high. Say we close back below, that's going to be bearish, especially if we get below this volume imbalance here, or excuse me, fair value gap. Clearing liquidity, closing back below, buy side, and inverting the fair value gap all in one. We did open with the volume imbalance, so we'd actually have to wait for that, because that could negate this, push bullish. As we said, very sloppy price here right now. Holding that volume imbalance pretty cleanly though. Yeah, real 50-50 here. Holding the 2 minute. Okay, 4-hour high as well. That's why we're consolidating there. So, still respecting that level beautifully, getting stuck in the order block. Low, high. Honestly, at this point, I would favor a run lower. If we can close below this again, a second time may be a little bit more convincing for us. We'll see how we do it. We're kind of at a point to where it's not, say, clean enough for me to actually want to put capital behind. Once again, perfect delivery into the low. We're still holding that volume imbalance and Q playing around in here. There's closure above, so if we're going to wick this multiple times, reject the low, close above, we'd want to see this try to hold now, to at least get us here. Right, so at this point we would expect order block into 1 minute fair value gap. From there we'll see if we create another failure swing or if we can actually get this high. Building some patience today. So really, yeah, we're not putting much weight into this emphasis anymore. Order block is our anchor point, and volume imbalance not so much. So even though we did close below, as we say, we are very ugly, choppy. This is where we kind of have to disregard 1 minute structure in a sense and rely on the time-based PD arrays, higher time frame. So I'm more so looking at low of the opening range, the actual order block anchored to that. And the wick still. That's the news wick, so that's going to be data. Admittedly, as we often say, right, closure above like this and negating that next candle will often lead to the bearish moves. So that's why when we run into this high, we see it close below. Ooh, I am tempted. We did pick up that low. I'm tempted to actually try here. Let's give it a chance. Nah, I just don't like that. We didn't close below that low. Very cautious this morning. When we understand that we're in this type of delivery, right, I'm very, very hesitant, as we say, quick to preserve capital here. So slow to enter, quick to manage, cut risk. Which also means we require a little bit more for confirmation. It's like, it's nice to see us break below this order block. I wanted to actually close below the first presented though. And this low at least, right? This could very easily be a short-term low being cleared, hold first presented, displace back inside. So we will follow this, tape read it. If we want to stay bearish, like we shouldn't try to get back above that order block. We close below it, we get above it again. We fail to even get into the 1 minute. And then we break structure lower or break back below it. So as a tape read, right? This should be like the protected setup. We could just tape read that there. If we can hold this, close below the low, give some type of displacement below the first presented here, that may be another opportunity for entry there. Just using the first presented. Small new week opening gap inside of it. Well, we'll see. As we said, this would have been the entry. We're fine not really going in. We'll tape read this for now. We displace below, we'll look to enter here. Up, close candle. Same exit. Go for the low. So right now, there'll be another opportunity for entry. We're gonna want that. You'd want to see NQ hold the high of this wick. Notice what else? There's not been one fair value gap today that we can classify as the first presented. So that in itself as well is also why we're very hesitant. Wishy-washy price delivery, we call that. A lot of back and forth, give and take, not really moving anywhere. See how big our range has been since 9:30. I mean, really with the bodies, about 10 handles. If you go wick to wick, I guess, 13. Still, that's tiny. All right, admittedly, we wanted to see a run lower. Picking up the short-term low, holding first presented. Let's say that we leave this volume imbalance open. We might actually flip our bias here and go for this high. Original consolidation holds. We clear the short-term low. New week opening gap holds perfectly. Below the opening of the hourly candle, so if it's going to run bullish, this will be the best place to look to enter. What we'll do is we'll look for, okay, so already I wanted to see that stay open. It doesn't. We were going to look for that to stay open. Displacement through these highs. Still could look for displacement through the highs, but no volume balance. Seeing it hold like that at midpoint and close in the volume balance, to me, that's a little bit more bearish, actually. So, like, if we were to close back below, or to block low, after hitting mean threshold, we would look for a run into the low again. At least the first presented here. So let's see how we close here now. Closure below, as we often said, we would expect that to hold. We actually got below opening range as well, so yeah, we'll look to see this try to hold bearish, at least retest first presented here. Closure below first presented, we'll find that at that point, trying a long for the lows, or a short, excuse me. Turtle soup long, maybe. Honestly, that wouldn't be a bad idea. I am debating this one actually. Because let's for a moment assume our current dealing range, which is this low to this high, does not want to get breached. We will pick up internal range liquidity, so the relative equal lows. So far today, hopefully you guys have stayed safe. Or gotten a nice little miniature win, like Mike. Because yeah, this type of delivery, barcode here. This is where you just flip a coin. You buy or sell, if it's heads or tails. Risk management. All right, that stays open, and we close above the highs, we go long. Intermediate swing point put in place inside of the first presented on a weekly sense. Failure swing to take out that low, holding at the original wick, displacing above the order block. Need to leave the discount, however. Close it in, all right. That makes it easy for us. As much as it's painful, it's always nice to sit inside of delivery like this, just to get familiar with it, the characteristics. No fair value gap really is crazy though, now that we think about it. I mean, granted, right, we did have one here, but as we said, for us to classify it as like a first presented, it needs to be at least a handle. This one was under that. So technically fair value gap, but nothing of value. All just back and forth, which is why really I am thinking about soup in here. Soup in the low. Not expecting this wick low to be cleared. Especially if we can't get into this 1 minute fair value gap. So like if we go down first, we're gonna try that. Just one. We're gonna go extra light. Actually, we can go two. Very light risk. If we go up here first and then break, we're gonna remove that immediately. This is more so on the fact that we leave an inefficiency, pick up liquidity, and then we'll look for a return into the inefficiency. Honestly, on days like this, I don't really prefer either. Like, let's say that I'm trying to get a payout, or let's say that I'm trying to flip for days of profit, then sure. But we're already past that point. So, like, NQ is nice and all, but really, it's just as ugly, right? Like, no fair value gap. A lot of wicks. Yeah, it's moved more as far as like points, right? It's always going to move more just because the nature of NQ. But when I switch to NQ, it's not so just because I'm looking for larger moves. It also has to still have like narrative behind it. Because it's made like in times like this, if you're offsides, it'll hurt you just as quick. So for me, I'd rather just avoid it. Like ideally here, like yeah, because we're at a spot really where I don't have much of a bias either way. Like we could read it. Yeah, exactly right. It'll hurt you even more. Just making you more upset. It's like in choppy conditions, it chops you up a lot quicker and easier than ES would. Right now it's holding longs better. Like it's easier to see longs in NQ, right? That's kind of what we've been pointing out. We trade into the low of the wick, we close back above it. The high should hold and run bullish. So like it's valid to see something like that. And that'll give you an easy one-to-one. So in that sense, NQ is not bad because it can give you easier trades if you're aiming for lower targets. But today I'm not really in a rush to do much. I would like to slow though. That turtle soup's looking more and more juicy. The longer that we leave these relative equal highs here, we'll use the actual low. What's that new week opening gap? Yeah, because that's the new week opening gap. So we'll just use the low of it perfectly. Wait, what was that? What did I just do there? Wait, what did I do there? Oh, don't want to do that. So like, let's say we imagine we are using NQ, right? That should also hold there. If we're gonna run the high out. Another one-to-one. Which, I mean, we could do that. Maybe one of these days we'll do that. I'll go full high frequency trading algo on y'all. When I used to learn, that's how we used to do it. Just trades back and forth all day. We stay open. Da, 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 da. I just don't trust that. I mean, that's middle of the range. Like, that will hold if we're going to stay bullish. But when we're in choppy markets like this, I don't ever like to be entering middle of the range. So we'll just watch. And if that holds, nice. We like the extreme to the range in choppy markets. So turtle soups, reversal signatures, things like that. Not necessarily continuation patterns. Bruh. Damn, Mike, what the hell? Well, that's your problem there. You're trying to swing trade Jackson Hole. Crazy. That was the worst time to try. If you're going to swing trade, you should do it like September, August, when the fall starts. That'll be the best time to do it. Usually we get trending to close out the year. Yeah, look at this delivery. Holy cow. All right, we might just leave. When we just look at that by itself. Like, bruh. Oh, there we go. See, NQ is playing nicely, but really not worth. Failing to get in there still. Let's give a quick run in this low. Let's soup that. Look at this trendline liquidity right here. Right, and we have the equal high. So what is retail seeing here? They're seeing double top, If we break out, they're going to try to sell that. But when we come here, we buy their sells. Then they move stops to the equal highs. Boom, we run and pick up those stops. And that's what will happen. If I was making the market, that's what we should do. Conversely, I almost want to short that, to be honest. Now that we run this high. Oh, we should have shorted that. That's almost like one of those real-time decisions. NQ is running that high just as we're returning into this inefficiency. We have all this liquidity. We expect this to be more of a run on stops and a break lower, which means this 1 minute would hold. Now that we clear the equal highs, look for a break. We're still going to actually leave this here. I like that. Target that high one more time. Notice we still have yet to close above the order block. Bodies, bodies, bodies. Wicks doing damage. Bodies telling story. This is such an easy liquidity run here that we're at a point now where we don't really even want to go long at all. Even if we did invert this, that's kind of the thing. We'll just read. If we don't get an entry today, I'm not stressing over it. Closure above this fair value gap, stop gets moved. Or entry anyways. If we could leave those equal highs, it's not bad. What time is it? 10:30. I'm still looking for max coinage here. What we could do, we fake the breakout higher, so we clear the highs. People go long, they jam their stops below the low. We reverse to pick up their stops. People then try to chase it lower, put their stops at the swing high that was formed. We reverse to clear that high. Yeah, I like that. Is that a liquidity void? It sure is. Okay. Liquidity void here, NQ. Let's get below that. Back-to-back volume bounces. In a trending market, even one that's just high or more probable, I would be fine with this entry, like if we're targeting this buy side, so we could watch that. Because of today's nature, right middle of the range of a consolidating day. Not actually gonna enter it. We'll just follow it. You head out. Yeah. All right, yeah. 6468, right there, 15. Yeah, I like that. So I'm saying I like that entry still. Let's see if we can get it. Bye, baby. Closure below, we like that. Let's try to hold that in the short term. We clear the highs, we break, hold that. We should respect the inversion order block. So as we trade up into this, we would want this candle now to close bearish. Wouldn't want to get above its midpoint again. Run down into entry. And then look for this midpoint up here. As you say, max carnage. We did pick up a lot of these lows. Let's see, we've got 1, 2, 3. So maybe that's all price had to do. Get internal range liquidity. Or as we said, we got that low. We got this low. And this. So in theory, 3 areas of liquidity have just been picked up. So if we don't want to get the external range, it makes sense to now run bullish. Right, because within the current dealing ranges, here's the thing, they always change. So the overall prevailing, this is the range that we're stuck inside of. Within the master range, there's still going to be other dealing ranges, right? So that's going to be this low to now these equal highs. So let's say that within this current range, low to high, we don't want to pick up this low. We would just pick up the internal range that was already created there. And that's what we've picked up now. And we've actually got back above midpoint. Ideally, we try to hold mean threshold of this order block and get all the way lower for this external range here. Equal lows, as we said, would be nice. Low of or high of the new opening gap. This might point it out 15-minute order block perfectly. Entry is actually right on the inversion level as well. So like that. Because this one's anchored to the opening range. So instead of just using the low, the opening range, I'm just using the whole thing. Because even in like choppy conditions, right, it's still going to reference the algorithmic levels. So we're not necessarily using it for like entry, we're just using it for a barometer to measure what price wants to do currently in the short term. All right, we should get entry here soon, and then we'll see what we get. This will be our only entry for today. There's a midpoint. That would be crazy to hold there. We might, but well, it's not even midpoint, so we fell short of midpoint. All right, I still like that. We'll look for a return into this here, and then that break again. And Q back into the wick. We should hold that nicely, right? That's opening range low, perfect redelivery. I'd actually like to see that be the swing high if we could. Let this candle run lower. So now on the way down, right? Equal highs here, equal highs here. And now if we had a short-term high here, that's what we like to see when we're trying to turtle soup. Because then we have liquidity to target on the way back up that has yet to be engaged. So if we could hold, maybe even make equal highs here. So hit this one more time like that. That's perfect, equal highs, and then break a lower entry. That'd be like best case scenario for us right now. Nice. Let's hold that. Let's go straight into entry from here. And then we'll look for the reversal up into midpoint. Okay, so far that's exactly what we'd want to see. This will be interesting. Closure below first presented, less than ideal for us. We may need to pick up this low. So as we get entered here, we're going to watch the reaction. As we often say, ideally we enter on a swing low. So already I'd like to see this wick become just that, right? A wick and not a body closure. We don't want to see expansion. Well, we're going to take 5-handle partial. We can't do that until we actually get all the way up here anyways, so that's fine. So we'll actually just partial at the wick again. If we close above this, I assume we'll get into the wick, so we could close one there. If we could get bullish. So they said we want this to be a swing low. Oh, if this could stay open, that'll be money actually. So this is where we want to start going bullish now. So we want to leave the bullish volume imbalance open for one. We want to start clearing the highs. As we said, we left equal highs, 3 sets of equal highs on the way down. We want to clear the first one, close above, clear the second one where there's actually a small 1 minute anchor to the high of the order block. So closure above that, even better confirmation for us. As we said, partial at the wick that's been holding. Final exit will simply just be midpoint of that wick. So we don't even need to get external range. If we get displacement above this, we might actually try to adjust that if we're going to start running heavy bullish here. Main thing though is getting back above order block, because this is going to be the opening range low. So this is where rejection will take place if we're going to try to reject on this. Ooh, just like that. I like the closure inside. I don't like the rejection there. With the bearish volume imbalance opening right back on that level, no wick to the upside. We want a wick to the upside there. May need to revisit the volume imbalance. That's okay. We caught the swing low, so that's good so far. We'd want this discount to hold now though. 1050 to 1110, we want to give us that run. Get us out. Closure inside of this OB will be nice, because that'll be inside opening. Beautiful. Let's get that partial if we can. Now we need midpoint. So there's the first. We close above the first equal highs. We use that as support. Second equal highs, perfectly. We've hit 3 equal highs now. We should clear that. Same idea though, it needs to be closure above now. We don't want to see a wick into this fair value gap followed by a rejection. What we'd really want to see is for this to stay open while also closing above the order block. And this fair value gap. We can move this for now. Nice, nice, nice. Let's see if we can get one. I kind of think we'll get these highs. We're going to push it a little bit. We're going to be a little greedy. If we're going to retest this, I like this bullish movement here. We should run this high. And we should revisit this 1 hour fair value gap here. So we're going to adjust our targets a little bit to look for a more bullish expansion that we could partake in. Beautiful. So there's the high. Partial means we move stop here. We really shouldn't come. We shouldn't come for that long. We'll go ahead and do that. I'm fine with that. Ideally, we don't want this to be a swing high. We never like seeing swing highs that clear liquidity and stay in that range. So we want, perfect, okay, nice. So I was gonna say, we want that. Because of that, we're good here. And now final becomes 1 hour. So we have this as our, that's buy side there. But we'll aim for the 1 hour. I like the 1 hour. You tell me we couldn't get the swing high exit though, bro. Disrespectful. Yeah. So as we said, NQ really all day was holding the bullishness. So a little easier in NQ, but that would have been a larger stop. ES allowed for a tighter stop because we utilized turtle soup. Five handles, baby. Good stuff. That's all we need on these days. Right, we already secured. So at this point, win-win for us. But good shit, my guy. Yeah, that's always nice, right? That was textbook right there. You always got to think. If I was the market maker, who could I damage the most? At least that's my thought. Like when we're in choppy markets, obviously it's different for range bound. Range bounds are easy, but like in choppy markets like this, it's always the thought process of who's in and how could they get it taken advantage of, right? How could we take them out? So that there is pretty nice. As you said, any retail trader that's trying to use like equal highs, we're going to close above that. They're going to try to buy that breakout. Stop loss here. We run right against them all of a sudden. Oh no. Now anyone looking for a trend line break lower, they're trying to sell that now. Understanding, or at least we understand, this is a false run to pick up the stop. So now you have people trapped in long here at the highs. You have people trapped short as we run lower. Both of them could get taken out as we now run back for this stop loss up here. At this point now, we may actually want to come back down for stop, but as we said, if we get stop and profit, we could care less. Already secured profits. Matter of fact, we're going to be less greedy. We're going to go right for buy side. So if we expect the hourly to be hit, we don't need to be that greedy for one extra handle. We'll just target the actual buy side that's right there. And if we run that, call it a morning and be content. So that is midpoint of the wick. So if we're going to run into a situation to where we don't want to run the high, midpoint will probably try to hold us again. So we could just use this high here. Nice round number. Yes. Last week I was fucking, I don't know what happened. That OBS was all goofy. My mic had got messed up, so the actual videos didn't have any audio. That's why I didn't post any. But this time, we made sure we got it all set up. That happens every now and then. I'm guessing my mic must get disconnected from my computer. Or it's just a silent. Bet. Okay, yeah. We can go. I can open them too at the end just to give one more look. Let's get this high. If we run this high here, we're gonna jam our stop all the way to this low. Because at that point, like if we wick this high and break again, we'll probably just stay range bound. So if we're gonna test that high, I want us to just grab that high in the same price run. Especially, let's say, like if we wick this low and then push. NQ wicks that low there. Equal lows here. We'll probably pick up this low. Right now we're inside volume bounce fair value gap combo right here. So this is what we're looking at. And at this point, I'm just using all of it. So using the volume balance, the actual fair value gap, and then even this hidden volume balance here. Right, we open here and we close here. So that's the low of it for me. Closure below that, as we said, then we kind of do expect the stop out. We'll look for the return into first presented. This is pretty much wanting to see opening range low be all price tries to do. If it comes down lower, we'll be stopped. Closure below, already we would expect to run lower unless this one candle can negate that. So here we'll look for no wick to the downside. We want this to get immediately close above. That's what we want to see there. All right, so that's the signature we speak about, where we close below a level immediately negate it, close back above, that'll be good for us. This is where we want to see that take place. We would not want to see this close below, open bullish volume imbalance, trade into the inversion, hold that wick, close bearish. That'd be worst case. Matter of fact, if we were to close back above this, I'd almost feel comfortable putting my stop here. Because if we're going to attack that low, we're going to come down here anyways. All about the closure, right? Closure above, we would expect this, the high or the midpoint to be the most sensitive. Okay, so we're already going here. We're going to cut risk again. We said we want that to be the low. No need to come back for that low at this point. Cool. No, it's very random. It's the most random area. No such thing, right? It's not random. Never random. Two-minute beautiful. Oh yeah, you're right. Look at that. The 2-minute. So as we said, we run this high. I mean, we're gonna go like this. Running into a 2-minute right here, but we should just, I want to see a blast, right? The one candle that kind of just blasts right through this high and this high in the same run. That is the expectation here. Not really a wick of this, more so a boop, acceleration stab. Target smashed, as they would say. We want to see it smashed. Because we really want the 1 hour, right? So if we're wanting the 1 hour to be traded into, we should see kind of like a quick candle that runs through the buy side. Equal highs there, just baiting. Getting people to continue to pile into the shorts. Right now we have equal highs here, whatever they see. Demand zone. Get people to go short, give them a fake run lower to now entice them to trust it, okay? And then boom, that's when we get the explosive candle that takes their stop. That's the expectation. Fake break lower after hitting equal highs, enticing retail. That turns into a wick, which is followed by the explosive bullish run that then picks up stop losses. Then you'll get the pullback, right? Because we would expect now these, so low where we enter, higher low, one more higher low. That's 3 drives into the premium. Then we would expect the retracement to attack these lows after hitting this 1 hour. That's the overall kind of bias or macro perspective, we'll say. once again, right, thinking of how can we cause the most damage to anyone that's involved. So right now I'm thinking anyone that got long, we get out at the buy side. If people don't know where to get out, right, they're going to try to hold and maybe look for the high. Yeah, isn't that crazy? Not one fair value gap. I mean, as we said, technically, sure, there is some, but not one of value that we would classify as a true first presented today. And yet precision is still found. That's the beauty of it all. Once you learn the language, it helps with anything. That's fine here, right? Just keep baiting people to short. Another fake move lower. Building in short positions here. Double top, triple top. We would expect one quick, almost like this. Just one quick bullish candle that slices right through that liquidity. Equal high, nah, we're playing here. We're inside of a 2 minute as well right now, so that's kind of also why we're hesitating. There's a premium fair value gap right here. But as you said, I think that's just more of a speed bump. We should get through that. Just so you guys can see it. 2 minute right here. We're right at the opening of this hourly candlestick. So now that 11 is entered or opened, the hourly wick lower has been formed. We should see the run into buy side here. By 11:10. If we don't get it by 11:10, I'm closing manually. With how close we are to the actual target. Equal highs again. Right, this is where people start getting antsy here. But you just gotta commit that your target's gonna get met. Oh wait, I know why, fellas. Come on, that's my fault. What did we say? Magnet. Let me rotate it. There it is. Now we'll get it on this candle here. Don't worry. I'm telling you, magnet always works. That's how you know you're getting desperate, when you pull out the magnet. You start pulling out emojis. It's got to get here, this candle now. Yes, sir. Told y'all. That's all you need to do, fellas. The magnet always plays out. Beautiful. And we close right on that. Oh my, it's so nice. All right, give me the swing high. Move the magnet so we get the swing high. No, stay. Stay there. We'll take equal highs. Stay there. Ah! All right, fellas. Not precise today. That's my fault. Should have took the hourly. But hey, we're content with that. So overall, I mean, goddamn terrible day. Price action wise. Like, that's disgusting. As we said, very patient. Gotta be very patient in times like this. When we understand it's consolidating, I'm always really gonna look for turtle soups or like immediate purge and revert entries. I'm never gonna look for middle of the range continuation entries. So for us, we had a turtle soup opportunity. As clear as this. So we form a short-term low inside of our first presented. Right, that becomes sell side. That low was formed just above a new week opening gap, and we had left equal highs. So as we start moving lower, we understand that these equal highs and this high becomes the buy side objective. We're simply moving lower to pick up sell side before reversing, and that's why we turtle soup there. So we enter right on that low, right? Beautiful entry, catching the swing low, perfect entry there. We then get the immediate displacement back into the opening range. Price tries to get below it, immediately negates that one candle, pushes right back above, signifying that this is now our new protected low where our stop loss was put. And then eventually we get that release into buy side. Missed the swing high by one candle, right? If we would have done the hourly, we would have hit it perfectly, but as we say, the exits are the one thing that I'm never going to be satisfied with. But that's okay. So overall, yeah, real clean. Real nice, real nice. And we had the same thing as well, so we actually did take that. Just so you guys could see, where's that at? Cool. Well, it's the same thing on the trader rate. Same entry, same everything. That to me was a high probability entry. So we actually got entered on this candle as well. That's funny. So same entry, we just got entered one candle. So we low ticked that candle perfectly, actually. That's nice to see. Would have liked the swing low itself, but whatever. We actually caught this swing high compared. So swing low to swing high, slight retracement, perfect run into buy side, and now look at that holding beautifully. So overall, even in choppy conditions, precision is still found. And a good day was had. We will come back tomorrow morning. Let's see what we got for news. One, two, three. Okay, so high impact news. Oh, and consumer. I think consumer confidence, high impact. Hold on. Some people have it different. Okay, so I think consumer confidence will be medium impact. So we'll just be back tomorrow at normal time, 9:25, and we will see what we get then. So until then, have a great rest of the afternoon, everybody. Stay safe. We kind of think the consolidation will continue, but we will come back tomorrow morning at 9:25. See you guys around.